What's up, everyone? It's Scotty with MoneyVest. In today's video, we are going to be talking about ChargePoint, ticker symbol CHPT. A lot of you guys have been asking for an analysis and an update on this company. So we're going to run through everything, fundamentals, technicals. We'll talk a little bit about the company's future because the stock is getting absolutely destroyed right now, pre-market down almost 25%, and it has been selling off from its all-time highs. I think it's down a little bit over 85, close to 90% as well. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. I did open up a few more spots for the month of November. You do get access to a lot of other benefits, including members-only private videos, Excel spreadsheets, Discord access with over 20 plus channels, trade alerts. Everything's going to be included, and you can engage and talk, discuss markets, fundamental, technical analysis, and trade ideas with over thousands of global traders and investors from all over the world. Again, it's a like-minded community, individuals that can help you, support you in your trading and investing journey as well. So link's going to be down below. There is a 16% annual discount for the month of November. And like I said, I did open up a few more spots if you're interested in joining us. So let's start with the presentation. And I'm actually quite surprised that for ChargePoint, they don't offer a lot of KPIs. Like in terms of key performance indicators for the business, there's not a lot. I mean, their presentation is very brief. Their investor pitch deck is very brief. There's not a lot of stuff that they've included. All they've done is, okay, the ChargePoint annual North American port sales have been increasing in correlation with the US passenger electric vehicle sales. So as EVs grow and the adoption and the transition to electric vehicles grow, their ChargePoint actual port sales are also increasing. That's pretty obvious at the same time, and they are expecting a 54% CAGR from 2020 to 2026 with over 4.2, 4.5 million vehicle sales in the US EV passenger market. And as a result, they're also expecting a significant increase in the port sales moving forward as well. Now, this right here is winning in North America, expanding in Europe. Now, ChargePoint is global. They're pretty much in almost all states, I think, in the US, and pretty wide, pretty wide expansion in Europe as well. And they're pretty much in a lot of the states when it comes to Europe. So operating in 16 European markets, supporting in 9 languages, partnership with energy retailers and leasing solution providers, leading in North America, all-purpose charging, operating across all verticals, integrated into where people live, work, and play. So we've talked about this company before. We've looked into this before, but I've never really invested in this company because of the lack of profitability and the sort of like the financial health of the business as well. And that's one of the things I think everyone needs to understand. Like if you are literally a beginner investor, right? One thing please take note of is that if the company is not profitable, if there's lack of profitability or lack of positive cash flows, two things: not profitable, no positive cash flows, and I guess taking a look at the balance sheet as well. If those three things are not there, start small. Start small. You can always size up, right? But because those three things are not there yet, the company is not profitable, the company is not generating positive cash flows, and the balance sheet is not that strong, there's always going to be a tremendous amount of risk with any business, right? So you can always start small and you can build and size up over time as your conviction develops, as your confidence builds, and as the company improves and executes. Those are very, very important things because in business, execution is everything. If you don't execute, you're not going to survive long term, right? If you execute, yes, you're going to be around for a long time. And that's why we look at profitability, we look at positive cash flows, we look at balance sheet strength, because we want our businesses, the companies that we're investing in, to be around for a long time. So if you take a look at the actual numbers for ChargePoint, by the way, non-GAAP gross margins did decline substantially, and that's probably one of the reasons why the stock is getting hammered down almost 25% here. So non-GAAP gross margins coming down to 3%, and this right here is the actual income statement. Now, revenues are still growing, gross profits are more or less flat, and losses are ballooning as well, right? So you've got 6 months ending in July. We had a total revenue up to 280 million. That's up from 189. So if you do 280 divided by 189, we're looking at a growth of 48%. So 48% growth in top line revenues is actually pretty solid. But then if you take a look at gross profit, it's more or less flat, right? 31 million. That's up from 30 million. So gross profit margins not expanding at all. And even though the revenues are up, their actual margins are very, very flat. Not to mention, if you take a look at loss from operations, that's up from 180 million to $203 million, right? So research and development, 9% increase. We've got sales and marketing to $76 million, and general and administrative expenses to almost $50 million. That's up from $43 million as well. So their expenses are growing. Revenue's up 48%. That's phenomenal. But expenses are also growing, and as a result, they're not profitable. And we've got a net loss of $204 million as well. Now, one more thing I want to point out is that take a look at their interest expense. If you come over to the balance sheet, so this right here is going to be their balance sheet. And what I want to help you understand, and this is such an interesting sort of thing to also take away, and this is going to help you in your understanding and your education in fundamental analysis as well. So take a look at the debt, okay? All I want you to focus on here is debt, which is non-current right here. So non-current debt is any debt that's going to mature in over 1 year. If you take a look, this is from same time last year. So we're looking at, January 1st, 31st, 2023 and July 31st, 2023. So 6 months, right? 6 months, the debt has not increased at all, right? It's gone from 294 to 295 million. So that it's pretty flat, right? It's very, very flat. The debt levels are consistent. They're not grown. But then if you take a look at their actual interest expense from same time last year, right? It is up dramatically, right? It's up from 3.8 million to almost $6 million, right? So 5.8 million. So what we have here is an increase of, let's just do the math here, 5.8 divided by 3.8, a 52%. A 52% increase in the overall interest expense for ChargePoint. What does that mean? That means this is a company that is dealing with a floating rate debt because as interest rates have gone up in the last 1 year, their interest expense has jumped 52%, right? So that's not great because they don't have the liberty to have the most flexible terms or the most favorable terms. And as a result, this is a company that's dealing with higher interest rates, and that's affecting their bottom line because 5.8 million, that's a 52% increase in interest expense, certainly affecting their bottom line and obviously generating net losses. Not to mention there's other problems, with respect to the amount of expenses that they have, so pretty sizable expenses, and they're spending more than their overall gross profit, right? So there's $235 million in operating expenses versus $31.6 million in gross profit. So there's no doubt that the company is not profitable right now. Now, if you take a look at the balance sheet, so they are sitting on short-term investments, which is zero, which has gone down to zero from 104, and cash equivalents now sitting at $233 million for the company. And we've got a pretty sizable inventory as well, right? So inventories have also ballooned for the business. You can see that it's gone from 68 million, and in 6 months, it's gone from 68 million to $143 million. That's more than double. That's over 100% increase in inventories in the last 6 months alone. Not to mention cash equivalents have also decreased, and short-term investments have literally just evaporated and gone. Goodwill here sitting at 216 million. So that's about 20%, 21% of their overall assets, which is a little bit on the higher side for me. Intangibles are sitting at 88 million. So when you combine those two numbers, I think we're looking at closer to 300 million. So that's 30% of their overall assets that are in intangibles and goodwills. Inventory makes up about 14.5%. But it's not really the level of that inventory, but the increase that we have seen in the last 6 months that concerns me a little bit because as interest rates are higher, there's a drop in overall demand for electric vehicles and charging stations, and as a result, inventory is piling up for this company as well. And their total liabilities are 800 million, which again is still, I guess, controllable. But debt is 295 million, so cash 233. So I've got slightly more debt than cash on the balance sheet, and current ratio. $700 million in current assets with about $340 million in current liabilities. So current ratio is still pretty good, almost 2. Quick ratio when you take inventories out is also above 1. So balance sheet is, I would say, okay, but there are concerning factors related to inventories, related to intangibles and goodwill, and the fact that cash and short-term investments are going down. So those are some things. So those are some yellow flags / red flags that I will be looking at for ChargePoint moving forward. And of course, we're looking at negative free cash flows because operating cash flows are negative and have only gotten worse from the same time last year, from 133 to 190 million. And then, of course, we've got a decrease in, of course, purchase of plant and property equipment, about almost 10 million. So when you combine those two numbers, negative free cash flows of almost $200 million for the company as well. So, this is where we are with ChargePoint. I mean, unfortunately, it has been selling off, and for the right reasons, because the company is still yet to execute better, and it's down over 95% from its all-time highs. So, if you come over, take a look at the valuation. Market cap's now 1.1 billion. If we discount, times, let's see, 0.77, I guess, we're looking at an 847 million. So it's going to actually open up sub $1 billion in market cap, 850 million with revenues of 468 million. So it's going to be trading at 2 times sales. But the biggest issue with the company obviously is profitability and the deteriorating balance sheet and the financial health of the business as well. I'm sure they've got a lot of, interesting projects, and they've got they're operating in an industry that is growing, and it's expected to continue growing, and transition and adoption for EVs is expected to be super big. But it's times like these, with higher interest rates, with the downturn in overall demand for EVs, is when the real players will emerge over the long term. If the companies cannot survive these downturns, unfortunately, they're not going to be around for a very long time. So one more thing I want to point out is the cash burn rate. So if you come over to their operating losses, so if you come over, take a look at their operating expenses, and if you simply take a look at loss from operations, which is 203 million, but overall operating expenses in the first 6 months were $235 million, right? So 235 divided by 2, we're looking at $117 million for every 3 months. But let's just do 235 divided by 6. We're looking at $40 million per month is what the company is spending on in terms of their operating expenses, right? This is simply operating expenses alone for the business. So if we take into account their operating expenses each month, which is 40 million, versus the cash that's sitting on the sidelines, 234 million. So if you do 233 divided by 40, we're looking at less than 6 months. Less than 6 months worth of cash available for ChargePoint based on for their operating expense burn. So that obviously is not great either. It would be better. We would disregard this type of analysis if the company was profitable, or at least generating positive cash flows, or at least generating an operating income. But the fact that there's operating losses, that obviously makes it a little bit more challenging for ChargePoint to survive. So in the future, I mean, I wouldn't be surprised if they do do a little bit of share dilution to increase cash, to come up with the cash to survive, or they issue a bond or debt securities to kind of come up with the capital that they need to survive, or they need to turn things around in a way that they are eventually turning the corner towards profitability. But execution, I think, is going to be a little bit more challenging for the company right now, given that they are dealing with very, very tight sort of numbers, 6 months worth of cash, operating expenses here, and of course selling off. So from a technical perspective, I mean, it's coming down to a potentially new all-time low. So I think it's going to be a wait and see approach for ChargePoint. There's going to be a support at 237, I guess, but this is really where we are. I would definitely be staying away from this, at least for the foreseeable future, unless things improve, or unless there's signs of things improving at the moment. So I hope you guys enjoyed this video and a complete update on ChargePoint. Let me know your thoughts down in the comment section below. Don't forget, link to our Discord, Patreon is going to be down below, Excel spreadsheets, members only private videos. These are all tutorials that we go over trading and investing and fundamental and technical analysis concepts, tutorials, lectures that I think are going to be super valuable, timeless lessons that you can learn and kind of improve, in your journey of investing and trading as well. So links going to be down below. We'd love to have you on board. And as always, happy investing, and I will see you all in the next video.